All right, gang, once a month in studio, we welcome from Valley Mortgage the best dressed man in the real estate and mortgage industry, Mr. Brian Johnson. So good morning, BJ. How's life?
Great. Good morning, Eric. Thanks for having me today.
You bet. I threw you off there.
You did.
We got to spend this last weekend with a mutual friend. We went to their lake place. You did some wake surfing, and you said you're pretty sore.
I was, yeah. I was kind of hot dogging a little bit. Lost my sunglasses while I was surfing, and the first time I got pulled up, fell off the board, and I just kept hanging on. So my back was pretty sore the next day.
I've only water skied successfully once in my life, Brian, and it was behind a ski nautique boat. It took like 89,000 horsepower to pull my body up out of that water, but I was a delicate flower once I was skating on that water.
I bet it was just like glass, right?
Something like that. So you're with Valley Mortgage. For our audience who isn't familiar, give us a little insight as to who Valley Mortgage is and what you do.
Sure. We're the largest independently owned mortgage banker in the Valley, in North Dakota, actually. So we serve all of Minnesota and North Dakota. We're in Fargo. We've been around since 1983, and we do all types of loan types. Conventional FHA, VA loans, USDA, first-time homebuyer loans, and jumbo loans.
That's a whole lot of fancy terms for if you need to buy a house, BJ is going to be the one you should
We've
probably
got it
talk
all.
to, right?
We can help you out and find the best program for you.
Do you know, Brian, because people choose to purchase a house one of two ways, and there's only two ways to do it. It's either cash or a loan, right? And even the loan, you still need cash down.
Right.
How many people, what percentage of our population or the nation's population are purchasing with cash? Any idea?
I have no clue, actually, on that. You might know that
Well,
better than I.
this is a guesstimate, but I'd say less than 5%.
That sounds probably correct.
Right. We're going to say it's correct. If we say it with confidence, everybody's going to believe it.
Sure.
We'll do a lot of transactions this year with Hatch Realty, and we pay attention to how many are cash deals, and it's maybe investment properties, but even that is like a line of credit with a bank. So you're still essentially getting a loan, and very few people are writing a check or pulling money from savings or stocks or whatever it may be to buy a house. Most people get a loan, right?
Right. Most people do. If you're unique enough where you've got enough equity, you've paid your house off and you're going to pay cash for the next house, if you're downsizing, I could see that happening quite a bit too. Yep.
Yeah. And people are always downsizing or upsizing. Rare are they equilaterally sizing. Is that the right definition?
Yeah. Laterally moving.
Absolutely. So most people need a home loan. What kind of home loan would I need, right? Because that's the question. Somebody's going to show up, and I could be the person listening right now, or it could be Erik Hatch. But when somebody comes in and they says, "What kind of loan do I need?" What does that process look like to determine what's best?
We ask a lot of questions up front so that we can come up with the best options. And I always like to give people a couple different options based on their full financial picture. So we're going to take a look at income, credit, cash available. If you've got the ability to get a gift, maybe. There's other programs out there available for people that need to fix up the home right away when they move in. So it's called renovation financing. There's a few different programs there that we can look at too. So we try to custom fit some options for each individual situation and each family situation. So everybody's situation is a lot different. No two borrowers are ever the same. So we'll also take a look at their personal finances to tell them, hey, rather than putting more money down, everybody thinks that they need to get to the magical 20% down. Not a lot of people have the full 20% down for down payment, but if they do, maybe they would be better off financially paying off some other debt with higher interest credit cards and so forth, and put less money down. Interest rates are still quite low right now, so just making those decisions can be a wiser move for some families.
Yeah, great points, Brian. Again, those of you tuning in, Brian Johnson with Valley Mortgage. And if I heard you correctly, the consumer doesn't need to know what kind of loan they need, right? They're going to come into you and say, I need a loan, and then you as the mortgage expert are going to have the specificity to be able to identify what's best for them and at least give them the options, right?
Yeah, I would say 95% of the loan terms out there, people need a 30-year fixed, just a white conventional or FHA 30-year fixed. We can take a look at it and maybe offer different suggestions and kind of structure things a little differently and give them some different options to take a look at, but then let them make the decision.
Now, I refinanced my house last year. My wife and I had a remodel done on our property, and then we ended up refinancing with you, Brian. And we went from a 30-year to a 15-year. Why?
Interest rates are typically 0.5% to 1%, depending on the market, lower when you get that shorter term loan. But then you do have a higher monthly payment. But it does force you to pay off your loan a lot quicker. So for some people, it makes more financial sense to do that.
So yeah, our monthly payment went up. Fortunately, we were able to cover that extra. But the fact of the matter is, we're a year into this now, and we're looking at, we only have 14 years left on our mortgage.
It's kind of nice. Time flies, right?
Yeah, well, I wish the next 15 years would move slower as I have young kids, but it's going to move pretty quickly. And paying that down is, I think this, let's say you have a mortgage payment of $2,000 a month. In that mortgage payment, Brian, what is traditionally a part of it? Because I know we're paying down principal, but what are all the other elements of a monthly mortgage payment?
Most people's monthly mortgage payment include principal and interest, and then property taxes. If you have special assessments, those will be included in there, and homeowners insurance. If you put less than 20% down, you may have to pay mortgage insurance also. And then there's certain people that don't want to escrow for those taxes, specials, and insurance. If they have put 20% down or more, then they have the option to pay those separately on their own. Okay. So then it would just be the principal and interest.
So let's say I don't have 20% down and I'm paying $2,000 a month for the whole kit and caboodle, right? By the way, I didn't expect to say kit and caboodle this morning, but it feels nice. What I know and understand, Brian, is on a $2,000 mortgage, you're paying maybe $300 or $400 a month for taxes, and maybe $100 or $200 for specials, and $100 for insurance, and that runs roughly to about $1,200 towards your principal and interest.
Right.
On a 30-year mortgage, on day one, you're really going to be paying that month maybe $800 in interest and $400 towards your principal or so, right?
Yep. It's heavily weighted on the front side, and then you end up paying more of the principal after usually you're 13, 14 is when you start paying down more principal than interest.
Now, on a 15-year note, though, I'm looking at, if it's the $2,000 payment, it's more like $600, isn't it?
Right away, you start out right about equal, and literally within month 1 or 2 or 3, then you start paying more principal down right away.
Right, because the bank has less risk and you have more investment. But what I love about it is, let's use that $2,000 example, and let's say $400 a month is going towards your principal. That means that after the end of a year, you've paid down $4,800 of value on your house, roughly $5,000, and then your house should have appreciated as well. And so you may be actually net positive when it's all said and done. It always flabbergasts me if somebody knows they're going to be in a community or a space and have the availability to purchase, why they would choose to rent. I know it's an easier method. I know that buying is not for everyone, but on a strictly financial basis, the numbers don't lie.
Right. And typically, if you look at it now, yes, steadily increasing prices are happening in our market, which is great. We're also seeing interest rates starting to climb up a little bit. They have been for the last probably 2 years. So now's a great time to buy. Things are just going to keep going up a little bit slowly. So it's a steady, healthy market.
Last story here, and then we'll go to break because this is an important one. Had a client recently who said, I'm going to wait until next year to buy. Wanted to buy a $250,000 house, and they said, I want to wait until next year. And I did the math for him, and he said, I want to be able to put down a higher percentage, right? Did the math for him and showed him that as the property value increases, as well as interest rates increasing, the $250,000 house he wants to buy this year, next year he can only afford $230,000.
Yeah. It's just amazing.
It's just fascinating, right? So if you're waiting to save up a ton of money, you might be actually losing the ability to buy more house. So Brian, people need to talk about these numbers specifically because we're talking gross generalizations. And how can people get in contact with you?
Sure. Let's check out your best options. Give us a call at 701-461-8450. Come see us at 3315 45th Street South in Fargo, or visit us online at valleymortgageinc.com.
Brian Johnson, you are a man, a myth, and a legend. Thanks for being here. Folks, we're going to head to break and go to livefargomoorhead.com while you're at it. This is Real Estate Radio with Erik Hatch.